Well, it's been an interesting quarter. That's probably an understatement. Let me start out and say that I hope that you and your family are healthy and doing okay. Also, thanks to the first responders and medical people that are on the front lines of this COVID-19 pandemic. We are all praying for you. At iWealth, we are just fine and operating daily from the office and home. We do have the doors locked at all times, but have a place to drop off documents for us. We also have some really good tools to sign documents online, so we are healthy and doing fine. As I sit down to write this quarter's recap, many emotions go through my mind, like how in late January and early February, we had the Democratic debates going on, a seemingly strong equity market, and life was normal. Stock market returns were going up and things were going pretty well. Then, in a matter of a couple weeks, we went from a strong, robust economy to a complete stop. We went from the prospect of a solid year heading into the elections in November to a most certain recession in a matter of weeks. That led me back to reviewing some of the past times we have watched this type of decline and reflect, so let me do some of that for you. During the Great Recession in 2008, we were going down 5 to 6% per month in the equity markets. During this past 3 weeks, we were doing this daily. It was a sharp decline. That was different. But let's talk about what isn't different. Being down 30% in equity markets, it's not different. We've been here before. In fact, since the 1900s, we've had 22 times where the equity markets fell more than 20%, and then watched the markets hit 22 new all-time highs. This will be no different in my mind. We will someday be at Dow 30,000 again. The question is, when? And no one knows that. However, if that is the case, then this equity market, it's on sale. We have had many clients and myself adding to their positions over the past 3 weeks to pick up shares at lower prices than they were just 2 months ago. This all makes sense if you can put it in, close your eyes, and just wait it out. If you are in that position, I would suggest you do that just now. We all know in our hearts that we will beat this virus and will be better coming out of this. More prepared, more focused on our families and our communities, a renewed relationship with our God. And I think that you are going to see the United States start to manufacture more goods here at home. And that's a good thing long term. We know we will never bet against America. With the Fed and the government putting so much money at this pandemic and a built up demand, I think we will see a nice recovery coming out of this. Certainly down the road, we will be talking about the deficit and how we handle that. But they had no choice but to help out Americans that were forced out of work overnight. So what do you do going forward? You follow the government guidelines for COVID-19. You understand that your first quarter statements are going to look ugly when they come in early April, and recognize that investing means having a long-term perspective, and you stay focused on that. You look for opportunities like buying equities on sale, refinancing your mortgage at these low rates, and considering Roth conversions that will someday grow tax-free. If you're a business owner, you must certainly and should be looking into the CARES Act and how that can help your business over time. Many bankers, CPAs, and wealth advisors like us are quickly learning the new rules. Speaking of new rules, there are some new ones out there that you should pay attention to. If you're older than age 70 and have been taking your RMD, your required minimum distribution, each year you do not have to take your RMD for 2020. Also, if you're under the age of 59 and a half and you have the ability to cash out your IRA or 401k up to $100,000 and not have the 10% pre-retirement penalty because of your age. Of course, you do have taxes to pay on it, and they give you 3 years to spread that tax bill out. There are some other changes as well, so just know that we are here to help. Finally, if you have any questions about this, about the market, the current risk, or these new opportunities, please reach out to iWealth today, because we are here to help. We have had clients ask us if we would help their family or friends with a second opinion because they're unsure about their accounts and what's going on right now, and that's justified. That is just fine. Feel free to forward them this message or have them contact us to set up a meeting. We're currently using meetings via Zoom and phone at the present time. Most importantly, stay grounded, stay healthy, and live in gratitude for all that you have today. Blessings to you and your family.